A crypto investor just saved $47,000 in taxes using a strategy most people have never heard of. And by the end of this video, you'll know exactly how he did it, plus 4 other legal loopholes that could save you thousands when you cash out your crypto gains. What I'm about to show you could be the difference between keeping your crypto profits or watching them disappear to Uncle Sam. Here's what's happening right now. Bitcoin and other cryptocurrencies are hitting new all-time highs. But here's the problem. The IRS has a specific checkbox on the front page of your tax return asking if you made money on crypto. They're watching. They're waiting. And if you don't know these strategies, you could be paying 10 to 20 times more in taxes than you need to. But stick with me because I'm going to show you 5 legal strategies that could save you anywhere from hundreds to tens of thousands of dollars in taxes. We're going to cover the Holy Grail strategy that lets some people pay 0% tax on crypto gains, the controversial loan strategy billionaires use to never sell their assets, and at the end, I'll reveal the $1 million strategy that not only eliminates your tax bill but actually puts money back in your pocket through deductions. Let's start with what I call the Holy Grail, legally paying 0% tax on your crypto gains. Most people don't know this exists, but it's right there in the tax code. Here's how it works. If you hold crypto for more than 1 year, you qualify for long-term capital gains rates. Now, everyone knows about the 20% maximum rate, but what they don't tell you is there's a 0% rate hiding in plain sight. If you're married filing jointly and your total income is under $89,000, you pay 0 federal tax on long-term crypto gains. Let me repeat that. 0%. Here's a real example. Let's say you bought Bitcoin at $30,000 and it's now worth $80,000. That's a $50,000 gain. If your income is $70,000 and you've held it over a year, your tax bill on that $50,000 gain? $0. But here's the catch, and this is where people mess up. That $50,000 gain counts toward your income for the year. So now your total income is $120,000, which bumps you into the 15% bracket for part of those gains. The smart play? If you're close to that $89,000 threshold, maybe you sell some crypto this year and some next year to stay in that sweet 0% zone. Strategy number 2 is simple but powerful. The 12-month rule. This could be the difference between paying 12% or 37% on your gains. Sell crypto before you've held it 12 months? You pay your regular income tax rate. That could be 37% at the federal level. Hold it just 1 day past that 12-month mark? Maximum 20%, but likely 0% or 15% for most people. I've seen people lose $15,000 in taxes by selling just 2 weeks too early. Don't be that person. Mark your calendar. Set alerts. This one simple rule can save you thousands. Now here's the strategy billionaires use, and yes, you can use it too even if you're not a billionaire. It's called buy, borrow, die, and it's completely legal. Instead of selling your crypto and paying taxes, you borrow against it. Think about it. When you take out a mortgage, do you pay taxes on that loan money? No. Same principle here. Let's say you have $100,000 in Bitcoin. Instead of selling it and paying $20,000 in taxes, you get a loan for $60,000 using your Bitcoin as collateral. You keep your Bitcoin, you get cash to spend, and loans aren't taxable income. Now, there are risks here. Crypto is volatile, and you need to manage that collateral carefully. But for people who believe in crypto long-term, this can be incredibly powerful. Here's a loophole that exists for crypto but not stocks, and most people have no idea about it. In the stock market, there's something called the wash sale rule. Sell a stock at a loss and buy it back within 30 days? The IRS disallows that loss. But here's the kicker. This rule doesn't apply to cryptocurrency. Remember when Bitcoin crashed to $16,000 in November 2022? Smart investors did this. They sold their Bitcoin at $16,000, locking in losses for tax purposes, then immediately bought it right back at the same price. If you bought Bitcoin at $40,000 and sold it at $16,000, that's a $24,000 loss you can claim on your taxes. But since you bought it right back, you still own the same amount of Bitcoin. It's like getting a tax deduction for free. And now that Bitcoin is back up, those losses offset your current gains. It's absolutely legal and incredibly powerful for tax planning. Most people think retirement accounts are boring, just stocks and bonds. But here's what they don't tell you. Your Roth IRA can own Bitcoin, Ethereum, Solana, whatever crypto you want. Here's why this is huge. Everything that happens inside a Roth IRA is tax-free. Buy crypto at $1,000. Sell it at $100,000. Zero taxes. Day trade crypto all you want. Zero taxes. Let it grow for 30 years. Zero taxes when you withdraw it at retirement. Let's say you put $7,000 into crypto in your Roth IRA, and it grows to $1 million over 20 years. In a regular account, you might pay $200,000 in taxes. In the Roth, zero. Here's how you do it. You can transfer money from your current Roth IRA at Fidelity or wherever into a self-directed crypto Roth IRA. Then you buy crypto through exchanges like Gemini, all within the tax-protected account. And now for the strategy one promised, the one that not only eliminates your tax bill but actually puts money back in your pocket. This is advanced, but if you have significant crypto gains, this could save you hundreds of thousands. It's called a charitable remainder trust, or CRT. Here's the magic. You donate your highly appreciated crypto to this special trust. The trust sells the crypto with zero tax consequences. Then you get 3 incredible benefits. Benefit 1, massive tax deduction. Donate $1 million in Bitcoin. You could get close to a $1 million tax deduction, potentially saving you $370,000 in taxes. Benefit 2, income for life. The trust pays you income for up to 20 years. So you're getting paid from the asset you gave away. Benefit 3, life insurance replacement. The trust can buy life insurance on your life so your heirs still inherit wealth equal to what you donated. This only makes sense if you have millions in crypto gains and genuine charitable intent. But for the right situation, it's incredibly powerful. Look, crypto is at all-time highs right now. The time to plan is now before you sell. Don't wait until tax season to figure this out. By then, it's too late. If this video just saved you thousands in taxes, smash that subscribe button. I share wealth-building strategies like this every week that you won't hear anywhere else. I've put links in the description to resources for crypto IRAs and more details on these strategies. And if you found this valuable, check out my next video where I show you how to completely eliminate taxes on real estate using a strategy most investors have never heard of. Remember, this isn't just about saving money on taxes. It's about keeping more of your wealth so you can build the life you want. I'm Grant, and I'll see you in the next one.